What do the Dutch tulip mania, the 1929 Wall Street crash, and the dot-com bubble all have in common? They're all cautionary tales from the world of financial speculation, a high-stakes game where fortunes are made and lost in the blink of an eye. Edward Chancellor's Devil Take the Hindmost, a history of financial speculation, dives into this fascinating and often treacherous world, charting humanity's endless quest for wealth through speculation. Stick around to uncover how greed, fear, and ambition have shaped financial markets, and what lessons we can learn from history's biggest booms and busts. Chancellor starts by defining speculation. Unlike investment, which is focused on long-term value creation, speculation involves betting on price movements to make quick profits. This high-risk activity has always been fueled by two powerful human emotions: greed and fear. Speculation isn't new. It has existed for centuries. From ancient Rome's grain markets to 17th century Dutch tulip auctions, humans have always been tempted by the prospect of quick riches. However, the promise of high rewards often blinds people to the risks. The Dutch tulip mania, 1637, saw tulip bulbs trading for the price of a house before the bubble burst, leaving many in financial ruin. Speculation thrives on hype, but history shows that what goes up must come down. If something seems too good to be true, it probably is. Chancellor walks us through some of the most infamous speculative bubbles in history, showing how the same patterns repeat. These events often start with innovation or optimism, leading to excessive enthusiasm, overvaluation, and eventually a devastating crash. This British stock market frenzy was fueled by wild promises about profits from trade in South America. When the bubble burst, it wiped out fortunes, leading to public outrage and reforms. Speculation on stocks reached fever pitch during the Roaring Twenties. Over-leveraged investors faced financial ruin when the market collapsed, plunging the world into the Great Depression. The internet boom sparked massive investment in tech companies, many of which had no profits or even viable business models. When reality caught up, the bubble burst, costing trillions in market value. Speculative bubbles are fueled by irrational optimism. Understanding the past can help us recognize warning signs before the next bubble bursts. Why do people keep falling into the same traps? Chancellor explains how psychological factors drive speculative behavior. Greed blinds people to risk, while herd mentality amplifies market trends. When everyone else is buying, it feels safe to follow the crowd, even if the fundamentals don't justify the price. During the housing bubble of the mid-2000s, many believed that real estate prices could only go up. This false belief, combined with risky lending practices, led to the 2008 financial crisis. Always question market trends. Just because everyone is doing it doesn't mean it's a good idea. Technological and financial innovations often spark speculative booms. Chancellor highlights how breakthroughs like railroads, automobiles, and the internet created massive excitement in their early days. While these innovations revolutionized industries, they also attracted speculative excess. The British railway mania of the 1840s saw investors pouring money into railroads. Many projects were overhyped or poorly planned, leading to a spectacular crash. Innovation creates opportunities but also attracts hype. Separate genuine potential from speculative frenzy by analyzing the fundamentals. Governments and regulators often struggle to manage speculation. Chancellor explores how attempts to curb speculative behavior have had mixed results. Some regulations prevent abuses, while others unintentionally stifle market growth or push speculation into unregulated areas. The Glass-Steagall Act of 1933 was introduced to separate commercial and investment banking after the 1929 crash. While it curbed speculation for decades, its repeal in 1999 contributed to risk-taking that fueled the 2008 crisis. Regulation is essential but must strike a balance between fostering innovation and preventing excess. Chancellor argues that speculation isn't just a financial phenomenon. It's a reflection of human nature. Speculation thrives on our innate desire for wealth, status, and excitement. It has both positive and negative effects, driving economic growth and innovation, but also causing financial ruin and inequality. The rise of cryptocurrencies like Bitcoin showcases speculation's dual nature. While some see it as a revolutionary technology, others view it as a speculative bubble with no intrinsic value. Speculation is a double-edged sword. It can create wealth and opportunity, but requires caution and critical thinking to avoid its pitfalls. In today's world, speculation is more accessible than ever. Online trading platforms, social media hype, and meme stocks make it easy for anyone to jump into markets. While this democratization of finance is exciting, it also raises the stakes. The GameStop frenzy of 2021 highlighted how social media and retail investors could drive speculative behavior, challenging traditional market players. The tools of speculation have changed, but the risks remain the same. Stay informed, do your research, and don't let emotions dictate your decisions. Chancellor's Devil Take the Hindmost offers a sobering yet fascinating look at the history of financial speculation. It's a tale of ambition and folly, innovation and greed. While speculation is an inherent part of human behavior, understanding its history can help us navigate the future that is the next time you're tempted to chase the latest market trend. Remember the lessons of history. Speculation can be thrilling, but it's a game where the unprepared often pay the highest price. What do you think? Are we living in another speculative bubble today? Share your thoughts in the comments below. If you enjoyed this summary, hit the like button and subscribe for more insights into fascinating books like Devil Take the Hindmost. Let's learn from history so we don't repeat it.